Well, the currency is looking pretty solid at the moment, sitting just above 69 US cents. But that's largely because the US dollar has dipped, although it's not yet broken below the upward trend line that's been in place all of this year so far, as you can see on the graph. But it might, though. It looks like global inflation might have started to roll over. Now, this is an index of inflation surprises in the US, Europe, UK and Japan. It's not inflation itself, but surprises about inflation. It's the sort of thing only financial analysts could come up with. But it does give an early signal of what's going on. And the reason it's happening is that global monetary and fiscal economic stimulus has collapsed from almost 14 trillion US dollars in 2020 to a bit more than 2 trillion this year and less next year. Now, the blue bars show the amount of monetary policy stimulus, now negative, and the yellow bars show budget deficits. And there are always budget deficits. We don't have surpluses anymore, so all the work is left to central banks and monetary policy. The share market went up again. Woodside shares fell more than 4% despite a huge lift in revenue because of the flying gas price. Mining stocks fell, but they were offset by banks, retailers and tech stocks. On commodity markets, iron ore and base metals went up, oil and gold down. And finally, here's a graph of percentage changes in carbon emissions since 1990, when the second World Climate Conference called for a global treaty on climate change. Our emissions have risen by the same as those of Europe have fallen. Europe has had an emissions trading scheme for 17 years. And that's finance.